Hello and welcome to another update video about Oasis Network, requested by one of my channel members. I think it's actually quite an interesting project. I actually wasn't aware of it really. So I haven't done extensive research on it. This is purely technical analysis because it was requested by a channel member. So also couldn't do it like an in-depth Elliott wave analysis because that takes really a long time. Also the chart history is fairly short, but I'll do what I can and really want to make you aware of what is currently happening here, what the price targets may be for Oasis Network Rose. This could be a big one for 2022, to be honest, or at least in the next bull run, whenever it will be. You know, before I did my TA, I just watched a few YouTube videos and took a look at a few other TA videos. There are not many, but there are a few. And at the time that video, the last video was made there, you know, we were here nearly at the all-time high again. And the person there said, right, the next target is like 50, 60. We're going to go up from here. It's all bullish. And again, before going into the chart, because I hadn't had a chance to take a look at the chart before, I said to myself, I wouldn't be surprised if the price dropped. And it did that. And again, it is, you know, easy for me to say that now, but it's just always when people get too bullish that then the price drops. And if you know my other TA videos, you know that I'm currently fairly bearish on the entire market. And that I always say also with Cosmos, what it did when people got too bullish, all-time high, new all-time high, when we were here at the previous high, all-time high with Cosmos Atom, I still remain bearish because this is currently just a phase in the market where not a lot of cryptos make new all-time highs. And the ones that are attempting to get stopped at the previous high. And this is typical for an ABC correction. So Elliott waves, you get your impulse up, which in some way this would have been an impulse here, 1, 2, 3, 4, 5 to the upside, after which you see an ABC. So this here already was a smaller ABC, and then what we're probably seeing here is a more complex correction of another 3-wave ABC here, possibly another, that was a 5-wave move down here in some sort. And this all looks very corrective to me because you see this impulse coming up, then you see here this correction come down. What you see then is an attempted next move up. So you get a 1 and possibly a 2 here if you want to count that as the next impulse. But what you then do is from that 1, 2, you get another 1, 2 here, where it already then gets a bit, and I wouldn't say unrealistic, but where you get, you know, a 1, 2 here, because this would have been probably a 1, 2 as well in some way. Then you have a 1, 2 here, another 1, 2, because you come down too far. Normally, ideally, this would have been a 3, 4, but the wave 4 comes down too far, so you have to start to count again in the lower degree, 1, 2. And what you could theoretically get now is another 1, 2, or yeah, you would have to get another 1, 2 now, and then a 3, 4, which would be super bullish because the more 1, 2s you have, the more bullish it is, because that just indicates for the next impulse just an extended wave to the upside. But when you have too many, it just gets a bit unrealistic. And we've seen that with the Polygon Matic, which did something similar, where it just looked very bullish. But then when you get too many 1, 2 setups, because you have to always start counting again with a lower degree. And again, it might sound a bit complicated for everybody who's not familiar with Elliott wave theory. But then it gets unrealistic when you get too many. And especially in the current market condition, I doubt that this is a bullish move up. I think this looks very corrective, to be honest. So I also, ideally what this was, in my view, when you start the fibs from the top there all the way to the down of that wave A. So you have the cycle top here, then you get your wave A down here before you then have to assume there will be another wave C, which will end lower than the wave A. This came nearly to the all-time high. Basically got nearly to the levels that Phantom did as well before it started its correction. So pretty much moved in line with Phantom. So the ideal target level here for this wave B, let me just show you. So you had basically your wave A, your wave B, and the wave C will be somewhere down there. That's where we're heading to. Of course, no guarantee, and I'm going to talk about an alternative in a moment. But for that wave here, the ideal target level would have been here, between the 0.5 fib level at 33.5 cents and the 0.887. And you can see that the target was filled perfectly, and that we even tried to get to the all-time high, but we failed. Yeah, we didn't get to the all-time high. That indicates that we even made a lower high, perfect for a wave B. And now we're coming down here again, yeah? Now we're coming down, and in my view, in this case, in this bearish case, which I actually prefer, we would land with that wave C lower. And I'm going to show you how and where. So primarily, we would start down here, get all the way to the high, and then you get your 0.887 and 0.786 fib level target level, which would be which is likely for an altcoin of that kind. So you would end your wave C correction probably here in the area between 17 or 18 cents and 21 cents, okay? For everybody who obviously doesn't want to wait for that area, because there's never guarantee, it's quite a small area, there's no guarantee that we're actually going to get there, even though I think it's likely, because this area would sit below the wave A here. It would start below the wave A. So that wave A, well, it did actually come down to 20.7 cents. So you would need to set that target area and start it at 20.6 cents. Of course, it could be that this is not an ABC. But in that case, you might want to start to dollar cost average in earlier. We've already seen a nice setback now from the high here all the way down to 28 or 29% drop, right? So we're currently at a key support. We are at a key support, and you know, what kind of support are we at? Let's just take a look from this last wave up. We are perfectly at the 0.618 fib level, 32.3 cents, yeah? This is a very important support, It's not only that, it's also the 50-day moving average, which is still here. I mean, we broke below the 20-day moving average, found a bit of support there, dropped below it, landed on the 50-day moving average, which is also the 0.618 fib level. So there isn't, without much surprise, this is where you get a lot of support. And you can see we actually moved down a little bit, but then found support there. So this is a key level. If that level gets broken, I would expect next support, first of all, here at this technical line at 30.3 cents, and then you would come down to 28.7 cents. And personally, primarily, I would expect the price to go down all the way down to that level, despite this key support line here. But because you never know, you've got key areas here where it might be, if you're interested in the project, it might be interesting to, again, no financial advice, but to start to dollar cost average in at these levels. First of all, here, which is that 0.618 fib level where we currently are, because we have retraced 30% from the top. And this could also be, if you want to see it like that, like a 1-2 and another 1-2 wave. So it could be very bullish, yeah. For me, it would be, and again, it all depends on your risk profile. If you're interested, if you want to hold it long term anyway, and you're not bothered should the price drop from here further, I think it's a good price, yeah. But then I think another key level would be here, just above this trend line, depending on when we get there. At the moment, it would be here at just about 28 cents, yeah. But then if we break that level, I wouldn't dollar cost average in here, probably not. Would probably wait till the low here at 21 cents, yeah, roughly 21 and a half. This previous low, maybe a little bit higher, just to make sure I don't get sort of, there is not a quick bounce to the upside. So 22 cents, which would also be just above this target level here. And then probably I would set another one at around 18 and a half, just make sure I have something in the lower range of this target area. These would be my dollar cost average in buy areas. So basically starting now, actually, after such a big drop, and the potential to reverse here at the 26.8 fib level, 26.8, 0.618 fib level, sorry. Yeah, and I think, you know, after the next move up, then in terms of where we could be landing in the next bull run, I mean, with that extension of the fibs, you could definitely expect the next one to land here at least the 1.618 extension level, 64 cents, and then possibly even all the way up to, with a smaller market cap project, which is also just apparently, there's only a short chart history here. You could even reach maybe 95 cents, you know, the next run up. That would then be quite a lot of a jump, especially from a price range down here. But yeah, overall, I think an interesting project. Again, I didn't do a lot or too much research, but I would expect it to play out like that. Move down here, further drops certainly expected in my view, before we then move up, because nobody actually always knows anyway. So it's a current key support area here. So anybody who's interested in dollar cost averaging in, these would be my buy orders, and then I would take profits up there. Also dollar cost average out, and before it then will drop again, because it always will drop again. Looking also at the indicators, I think we can expect further price drops. So you need to come to your own conclusions here about that. But currently the MACD has made a bearish cross, so it's gonna come down here, in my view, further. So personally, in percentage, I would probably set for the first buy order, which is happening now, I would set a lower percentage, yeah, maybe 10 to 15% of my own portfolio that I have, or of the budget that I have allocated to rows. Just purely because the risk is quite high that we fall further here. MACD coming down, yeah, no decreasing selling pressure. And also here, the RSI, there is much more scope for falling. I guess we don't really have a long chart history, therefore you wouldn't see anything on the weekly chart. Here on the 2-day chart as well, lot of scope for fall down. We are still here in the bullish range, but just about to cross to the bearish range. But again, that just shows that we're at a key tipping point here. It could push up from here, and then at least we've placed the buy order. But the MACD also speaks a very bearish language here, where you can see that we've actually on the 2-day chart even have just made a bearish cross. So it's going to come down from here probably a little bit more, indicating further price decreases. And yeah, watch this trend line here. That's an important one as well. Another buy order set just above that. So that's pretty much my view on rows. Hopefully that was useful. If you liked it, please smash the like button and subscribe. Thanks a lot for watching. Bye-bye.